American Airlines has not been performing so hot in the last few years. But might there actually be something to the stock right now? We'll find out in this video. Hello and welcome to another video here at Bloomberg Capital. My name is Henrik and let's get right into it. Actually, the American Airlines stock has not had the best track record for the past few years, but maybe that is exactly what might make it interesting now, because the actual valuation of the stock is currently actually quite low, especially in comparison to a lot of other stocks, and especially compared to those that have risen dramatically in the last few years. Because one very important variable when looking at evaluation is the PE ratio, which is the price to earnings ratio, which for American Airlines at the moment is only 11.3 compared to the standard of the S&P 500, which at the moment is around 26.4. So we still have quite some room to the upside here until we reach the average. Now, the reason why a lot of other companies have a much higher PE ratio is that those companies usually have a higher expected growth rate. And while the growth rate for American Airlines maybe was not the best in the last 2 quarters, before that, the company was actually growing quite well, actually above the S&P 500's average. And we might actually get a return to that. And one indication towards that is another company, which is Delta Airlines. Delta Airlines published their quarterly earnings not too long ago. And actually, after also going through a bit of a dry period, they experienced an immense amount of growth. And if we take a quick look at the chart here, then we can see that after the earnings here were published, there was actually quite a big jump in the stock here. If we look at the numbers, it was about a 16% jump, so quite a bit. We might see some more money coming in as people start to believe in airlines again. Now, for American Airlines, we might see something very, very similar. But this time, we still have those quarterly earnings ahead of us. So one might assume that as these companies are somewhat similar, that the results might also be somewhat similar here. And that American Airlines might also, again, experience another influx of growth. As in the past, these companies have also roughly shared a similar growth rate to each other. So if we now go to the American Airlines chart here and assume that to be the case, that we might get a good quarterly earnings report that maybe not necessarily needs to be as good as the one from Delta Airlines, but that might also show some very good numbers here, then we can expect a somewhat similar move for the price. Now, if you want to get in on this, you can go either one of 2 ways. Either you can take the more risky route and go for a little bit of a gamble and actually get in right before the quarterly earnings, hoping for those good numbers, very similar to Delta Airlines. It should then, if you are right, lead you a pretty big jump here in just a few days. However, if you want to go the more safe route, then you can actually wait for these quarterly earnings and decide your strategy afterwards. Because if actually numbers are not looking as good as Delta Airlines and we get a bad quarterly earnings report, then the valuation might actually drop a bit or continue its sideways move in this price channel as it has done for the last couple of years. But if the quarterly earnings report is actually as good as that of Delta Airlines, then we might get a jump here to the upside and then most likely a continued uptrend, which might bring prices quite a bit higher. Because remember, as I already stated before, the PE ratio of American Airlines is actually quite low. So all we really need is 1, 2, maybe 3 good quarters of continued growth for many investors to believe in American Airlines and evaluate it at the same rate as most other companies in the S&P 500 are. So with a PE ratio more in the mid-20s. So if this plays out, then we could actually see price climb to the levels around these highs here from 2021. So that would mean around the levels of like $25 or $26, which from the current level would actually be an increase of over 100% in a time frame of probably just a few months, assuming obviously that the quarterly reports actually come out as positive as we are expecting. Now, I wouldn't really expect the price to explode upwards without a stop, really, to go to the moon, as they say. So probably around this level, at the $25 mark, we'll probably form out another top and then continue to move sideways. And then most of the price action will most likely be over, as then the company will be valued very fairly again. So I wouldn't really see this as an investment you can take on for the next couple of decades to bring price of a stock here in the hundreds of dollars and see thousands of percent of growth, but it is a very realistic target that over the next few months we could see a doubling in price here, after which you could then just exit your position and take home your gains. But at the end of the day, it is a bit of a more risky investment, but it might very well pay off. But if you want to get more tips on your investment journey, you can actually check out our Discord in the description below, where we post daily updates on different stocks, precious metals, and cryptocurrencies. And beyond that, if you enjoyed the video, we would appreciate a like and a subscription. And with that, I wish you a good week, and until next time, here at Bloomberg Capital.